there's a real misunderstanding in the Bitcoin space about what actually moves markets, whether it's people looking at Kalshi or other probability betting sites to actually gauge how they should make their investment decisions, or just misinterpreting simple headlines. It's really becoming clear that people just don't know where to turn. That's why today we're breaking down the narrative and leaving you with just the reality. I'm Dominic, and this is David, and welcome to 1% BTC. So, our first story of the day is that prediction markets, as I alluded to, like Kalshi, Polymarket, PredictIt, now show that Kevin Hassett as the clear frontrunner to become Trump's next Federal Reserve chair, with probabilities ranging from 63 to 79%. Now, Trump confirms he has chosen someone, but won't announce yet. So Hassett is viewed as dovish because he's focused on lowering interest rates and reforming the Fed's public-facing communication role, potentially shifting US monetary policy in a more pro-liquidity direction. So lower interest rates would equal risk-on stance in asset markets. Now, David, the reason I wanted to do this one today is because it's been flying all over X. It's over every social media site I see with any finance space you look at. And I just wanted to bring in a prediction market headline to sort of spice things up. So, surprise, manipulation level is high. Yeah, the narrative is largely speculative. It's based completely off betting sites. And yes, Polymarket and Kalshi have actually been rather have had pretty high success rates when it comes to major news events, but that doesn't mean that they're always accurate. Now, the media, unfortunately, are picking up these betting platforms and saying, and kind of framing it like it's almost a certainty. So he's a clear favorite. It's most certainly going to happen. It frames Hassett as being dovish, and therefore it's going to fuel that risk-on optimism that I described. The regime change at the Fed framing obviously amplifies anticipation of uncertainty, and Trump is teasing his appointments is going to obviously create heightened drama. So altogether, it's really tapping into that public frustration with interest rates and housing affordability, but it's giving us a bullish, anticipatory, speculative leadership transition excitement level of emotion. So, what are your thoughts before I show you the facts on this? What are your thoughts about when you see headlines like this?
Well, it's incredibly bullish. Again, I think on kind of the surface of it, it seems really bullish. The only kind of thing I'm thinking about, the risk, is people are swayed by sentiment, right? 78% is quite a high chance, and it's about the betting of it. And it's like, sell the news. This could be one of those things that spike the markets and then crash the markets. So this uncertainty and expectation may actually be a bit bearish in the end if something doesn't, or if he doesn't say the right things when he's appointed, or if he's not appointed, right? So it could actually be. So I'm gonna say a 1 out of 10.
Right.
Yeah.
But a positive one or a negative one?
Positive.
Well, look, you picked up on something. The factual basis for this is low. Yeah. Look, what can we actually pull out? So the tool is pulled out. Yes, we all know Jerome Powell's term ends in May 2026. However, Trump has not formally announced the nominee, which is why the betting markets are going crazy. Markets are operating on probabilistic signals, leaks, and political commentary, meaning the story is directionally credible, but not confirmed. So prediction markets are obviously all aligning, which obviously does give this story a bit more credence. But obviously, what does the tool manage to pull out apart from that? Well, it's pulled out that more credible sources like Bloomberg identified Hassett as the leading candidate. The problem that I see is that we know from news reports that have come out in the past few months that more and more professionals in the media and financial people that comment on the financial markets are actually using Kalshi, PredictIt, and Polymarket to come up with their own predictions of what they think is going to happen. So it's like, could be a self-reinforcing circle. I'm not saying Bloomberg used that to come up with their prediction, but it's all to play for. Now, in terms of like the output of it, yeah. Now, Scott Bessent has obviously called for Fed reform. Trump's obviously made his views on Jerome Powell very public. He's made it very obvious that he wants to lower rates. He's also said that he publicly knows who he's going to pick, but is obviously withholding the name. Now, he has actually said that he's going to pick it in early 2026, but that's obviously not imminent. We're still in early December. That's still a month off before we get any confirmation. So you're saying +1 or -1?
I'm going to say +1, but before you reveal the score, I'm really curious to see what the score is. I looked up Hassett, and I'm not sure if the speculative crowd has also kind of knows Hassett's background. But what I discovered was he's famous, or should I say infamous, for co-authoring the book Dow 36,000 in 1999. This was right before the dot-com crash. So basically, he could be perceived as an optimist who believes in the power of markets to grow into kind of valuations that are super, super crazy, that are kind of bubbles, right? So people may think, oh, well, this may be good or bad. If he doesn't recognize a bubble, people could say that this is negative because he just hypes bubbles. He doesn't believe in kind of the fundamentals of reading and protecting the U.S. economy.
Yeah. Well, interesting to see. I to be honest, I don't know. I didn't know that about him. So yeah, it'd be really interesting to see. Now, you'll be happy to know you've actually got this one right, a +1.5. So you did call it correctly. Yeah, I'll give you that one. Obviously, the fact that there is no official appointment is why this is scoring low. But what you might notice is that what the reality is, 2.2. That's basically trying to indicate sort of like how good could things get if Hassett gets elected. So if this is true, how good things get. Now, obviously, it surprised me that given the fact that he's seen as going to cut rates, I think it's safe to say that anyone that Trump puts in there is probably going to cut rates and obviously bring on this risk-off environment. It surprised me that that was at a 2.2, but the tool correctly pointed out to me that actually, once again, it's speculation. As you just pointed out, we don't know how Hassett is going to react once he gets in. So once this story is actually confirmed, and once if he is confirmed to get in, then the tool will reevaluate things, and it will treat it as a completely separate story, which is what is Hassett going to do now that he's in office. This story will completely close off. This won't be one that will matter into the long term. So I'll give you some of the points that the tool pulled out. So obviously him being put forward or called out by these betting sites as the front runner for the Fed matters matters. It actually matters less for Bitcoin today and more for how markets think US monetary policy might unfold over the next several years. So Hassett is known, and see if any of this aligns with what you found out. He's known for he's known as policy predictable, which obviously markets like, institutional, markets love that, and historically conservative on monetary expansion, which doesn't really go with the headlines of lowering interest rates, which means his potential appointment doesn't create immediate Bitcoin buying, liquidity flows, or regulatory shifts. Instead, the impact is purely narrative, macro sentiment. Investors begin debating whether future interest rates will stay higher for longer, whether the Fed will lean hawkish or neutral, and how much political influence might shape monetary decisions. It ranks low because it mainly affects expectations, not reality. In simple terms, this is a wait and see macro headline, interesting for economists and traders, but it doesn't change Bitcoin's adoption curve or infrastructure. Its significance only grows if Hassett is officially nominated and markets react. In the event Hassett is nominated, then we will have to watch carefully what he says and what he does in order to determine whether it is actually going to be bullish or negative for Bitcoin. Hence the score remains extremely low. Still positive that he's in the lead, considering he is seen as a potentially pro-Bitcoin, less lowering interest rates candidate. But once again, none of this is confirmed, and that's what I want to get across to the audience.
Yeah, that's a great point, Dom. And I think what the tool is also picking up is this another example of a politician politicizing the kind of politicizing the economy and potentially crypto. Because at the end of the day, remember that Hassett is a loyalist to the Trump administration. So if the market perceives the Fed is making decisions to help political polling rather than economic health, the markets could revolt. They could crash risk assets like Bitcoin.
Good point. Sorry, got to stay hydrated. And that actually leads us on to our next story. Now, obviously, I wanted to bring that up because I wanted to show that the tool is capable of actually separating out from complete speculation, even if it is backed up by real people betting real money, compared to actual facts and figures. And this is another example. So you may have seen this headline floating about, and I've specifically called out a X post from a large crypto influencer called Lark Davis, because I really liked the way he framed it, and I thought that it would make a great input for the tool in relation to the wider context of the story. But for those of you that don't know, the US Treasury conducted a $12.5 billion debt buyback, which is the largest to date under its revived buyback program. While social media is framing it as money printing or liquidation, or a liquidity injection, the actual mechanism is a technical market functioning operation aimed at improving treasury market liquidity and rollover efficiency. The macro and Bitcoin impact is, and I won't finish that sentence. Now, for this, I wanted to call out, the reason I've chosen Lark's post is because calls out largest buyback in history. He calls out debt buybacks mean increased liquidity and increased liquidity trends. He calls out giga bullish for markets. Yeah. Now let's look at the facts. Yeah, obviously the narrative is kind of like implicit in what he said. It's that greed, that FOMO, that urgency. But he's conflating with Fed easing that drives bullish sentiment. So the facts are, its actual factual basis is medium. So yes, the Treasury did conduct a $12.5 billion buyback, and it did happen on December 3rd, 2025. It was, however, part of a previously announced quarterly program. Besides the framing of a post by Lark, and Lark, if you do watch this, I'm a big fan, but either way, I've got to call this out. The framing was very much like this was a sort of unexpected event. It's something like it had to do to jump in, but they previously announced it. And they said that the purpose was to improve treasury market functioning and rollover efficiency. And it was funded by existing treasury cash balances. So what's the key there? It's not new money creation. People hear liquidity, and whether Lark meant it or not, they assume that means expansion of the amount of money. It doesn't. There was no expansion of the Federal Reserve balance sheet. So it does not inject reserves into the banking system. Buybacks were also, and Lark left this out, normal pre-2002. And this is a revived operational tool. So once again, this is not something that is completely unexpected. So the market reaction to the 2024-2025 buybacks has been consistently muted. And yet people like Lark, I've seen multiple big crypto, Bitcoin, and even sort of stock and equities influencers like posting this everywhere, saying it's really bullish. It's a QE cocktail. I mean, it's going to massive liquidity plus rate cuts plus Hassett. You build all this together and it's building a really bullish narrative. So where are you thinking this is going to score, David?
Until you presented the reality check, I thought this was super bullish because this is stealth quantitative easing, essentially, right? This is just liquidity, increasing liquidity. But as you said, this has always been going on. This isn't anything new.
It's not. This is the thing. It's not. That's actually incorrect. That's
Really?
a common misconception. misconception. It's not QE. It's not QE is bringing new money into the banking system. There's no new money created.
See, that's the misconception that I
That's
have.
the misconception that the tool has pulled up. But it's
Yeah.
I think that 90% of people out there, I definitely thought that way until I would say a year or two ago. It's very confusing. And the trouble is when you see headlines like this, you do assume, because even in Lark's post, he mentioned liquidity. They're like, that's why it's created that QE cocktail in people's mind. So I'm gonna spoil the surprise, but essentially you were right. It does create a bullish narrative. Now, the reason the narrative wasn't higher is because of that complexity I just spoke about. Most people don't understand what treasury buybacks are. So even though they see it, and even with someone like Lark's explanation, they still don't fully grasp what it means. So therefore, the narrative doesn't fully catch on. It's not a super strong narrative. It's strong amongst the people that don't fully understand it. So it sounds like a huge liquidity event, but in reality, there's almost no direct impact on Bitcoin because it isn't money printing, quantitative easing, or even liquidity injection. The treasury buybacks are funded with existing cash balances, which means that the government is simply refinancing or reorganizing its debt. So it's not expanding the money supply or increasing bank reserves. Bitcoin responds strongly to Fed liquidity, not treasury operations. So the market excitement around the largest ever buyback comes mostly from a misunderstanding. So that narrative that influencers like Lark are pushing is to frame it as stealth QE, but structurally, it's just a technical operation to improve bond market functioning. And historically, these have produced minimal price effects across risk assets. So if I were to summarize, sounds dramatic, but it doesn't move Bitcoin adoption, liquidity, or long-term trajectory, or Bitcoin's long-term trajectory.
So it's a non-event, essentially.
It's a non-event. It's the tool has marked it as a complete non-event. It was announced beforehand. It's something they've done multiple times pre-2002. They just restarted it back in 2024, 2025. Obviously, yes, it is the largest one they've ever done, but once again, no new money creation. So be wary when you read these headlines, guys. These are the type of headlines that David and myself want you to send through, because they're things that, to be honest, we didn't fully understand, and I'm sure that we don't fully understand them. I'm sure that this is where the tool really helps, because it explains these things. It takes away all the narratives and the FUD or the FOMO that surround these stories. Very easy to read a headline like that from a trusted influencer and misinterpret or be misled into what it means.
So this is an example where Bitcoiners or people that are very pro crypto are trying to push this narrative in a bullish way, where it's not politicized, it doesn't relate to the regulatory framework, and so fundamentally nothing is changing. So what I really like about this story and what the tool has picked up is it's an unbiased view of the reality that's going on, right? Don't buy into the hype, whether bullish or bearish. It's not kind of go back to what the facts are, and cross-reference it with what's happening in the wider economy.
Absolutely. And so this one is obviously labeled neutral. I would label it as FOMO ignore. We will not be talking about this story or similar stories like this again, unless obviously they are part of something completely unexpected. Then we may consider this, but otherwise, send this to any friends who sort of send you these, like, forward you these X posts, or you see sort of talking about it if you're in the financial space, and explain to them there is a difference between liquidity and treasury buybacks.
You know, Dom, this is a really good reality check, I think, for me and for probably our viewers, because we're not always gonna know what's hype versus what's real, right? But running it through the tool, it kind of really helps us to gain perspective of and to kind of go back to kind of ground zero as to what's really happening. So I'd welcome these stories. Let's hear from the viewers. Do you want to hear more of these types of stories that actually help to bring you back to reality, or would you like us to omit these stories if we found this the tool doesn't actually come up with any either strongly positive or strongly negative? So let us know in the comments, please.
Yep, we'll be driven by you.
Great.
So next two stories they may seem like the same story. They are not. Yeah, and it was actually the tool that pointed this out to me because I'd conflated them. I thought it was the same thing because I was going through them quickly, and obviously they made me quite excited. But the first one is the CFTC has, for the first time in US history, approved spot cryptocurrency products to list on federally regulated futures exchanges such as the CME and CBOE. Now, this shifts spot Bitcoin trading into America's most heavily supervised financial infrastructure and expands the regulatory footprint beyond offshore exchanges. So, manipulation level low. The reporting is regulatory and procedural rather than sensational, which I assume it would have to be because anyone, in my experience, most people in the crypto space are not interested in the CFTC. They have no idea who they are. And so, yeah, it's good to see these articles are framed in a very much level-headed way. Now, obviously, these do create, when you hear words like first time ever, for instance, it does obviously give you emotions of confidence, legitimacy, optimism. And the move positions the CME, CBOE as future liquidity hubs, reinforcing a major narrative shift. But what are the facts? The CFTC has formally granted approval. The rule is implemented, and designated contract markets can now legally list spot crypto. This is confirmed real structural regulatory shift with no ambiguity. So the CFTC approval legally enables spot Bitcoin and Ethereum trading on CFTC registered futures exchanges. This is the first time in US history that it's happened. And platforms like CME, CBOE, LedgerX, Crypto.com can immediately expand into spot markets. So this deepens the divide between the SEC's enforcement stance and the CFTC's market structure approach. Now, one of the things that stood out to me, David, like when I first read this, I picked up on the fact that a lot of these articles are saying, despite being very, very factual, and despite there being very sort of low like narrative hype around it, the reason that the tool has scored it down in terms of the factual basis is because there's really some big claims on there about the CME, CBOE, and these other big players following footstep. That hasn't been confirmed. So the tool has picked that up. That's why the factual basis was actually low to medium, because a lot of these articles focus on that taking place, when really the actual story itself is good enough. The CFTC have done it. They're the first mover. But strangely enough, a lot of the articles that were fed into it and that it searched about this all framed around the same thing, which was, hey, it's going to happen on the other big players are going to do it. And it couldn't verify that that was the case.
Interesting.
It may well happen, but
I personally, I was, when I first read this headline, as you presented it, it sounded like kind of boring regulatory jargon, right? That I didn't quite understand. I did remember that there was confusion of what the CFTC regulated versus the SEC as it relates to crypto, right? The crypto market. But what this story tells me is it basically formally bypasses the SEC as it relates to the US crypto market. So I actually see this as quite bullish. You know, if I just take it for the facts and what the kind of initial kind of impression is on me, I see it as quite bullish. And if you were to ask me the score, I would put it at a 2.
A 2.
Yeah.
Well, I'm going to make you very, very unhappy. And I'll just mention one thing. Now, obviously, you may have seen it's been buzzing around for quite a while, and obviously still no clear dates on when it will happen. But obviously we've got the Clarity Act / Market Structure Bill. It may even have changed names, but that obviously David mentioned the sort of the confusion between does all crypto fall under the SEC? Does it all fall under the CFTC? Does it fall somewhere else? Does parts of it fall under either of those organizations? Those unknowns have really affected the crypto market. And under the Biden administration, what it enabled them to do was kind of, because there was no clarity, which is why it's called the Clarity Act, or was at one point, is it enabled them to enforce rules where people didn't even know in which game they were playing. They would follow the rules if they could have, but by having that regulatory ambiguity, it basically created an environment where it was almost impossible to win. So that being said, and with that context reminder, David, do you want to review your score?
I feel like we're on a game show here. Do I want to risk
We are
$1 million do I want to bank $1 million, or do I want to risk it all?
You're gonna stick or move?
Actually, yeah, I'm gonna hold.
Yeah, hold. Well, unfortunately, you haven't won the million. You were doing so well in previous videos recently, but yeah, this obviously it's real. It's enacted policy. There's no ambiguity. It's a major institutional. It has major institutional implications. So the CFTC, by doing this, they've basically opened up the door for spot crypto trading inside US regulatory frameworks. And it's a significant structural milestone because it clarifies who can oversee and list spot Bitcoin markets, which obviously reduces that regulatory limbo I kind of mentioned earlier that has obviously slowed the adoption for years. The key point is the approvals don't create flows, products do. This is why the impact is important, but it's not a top tier story. So the decision gives exchanges like the CME, CBOE, and other regulated venues a clear legal path to begin offering those spot Bitcoin products, but it's unconfirmed whether they will actually do it. Likelihood they will is obviously quite high, but due to these reasons, this story has had to be scored down. The story, however, still scores extremely high, however, because it pushes Bitcoin towards mainstream US financial infrastructure. In simple terms, the CFTC didn't open the floodgates, but it built the pipes, and once the exchanges connect, the flows will come. So it's really big back-end stuff. It's the stuff that no one is interested in. I scored this in my head at a 4. I thought it was going to be important because I'm starting to get more used to that the back-end plumbing stuff being more important than front-end stuff. But yeah, it said it's basically one of the most important US regulatory milestones since the ETFs. It's a really big deal.
That's really big huge. Deal. That's huge. You know, initially the reason I rated it a 1 compared to what the tool has presented is Binomial is quite a small player compared to names like, or giants like Coinbase and Binance, right? And this is leveraged spot trading. So it's quite speculative, it's quite risky, but as the tool is picked up, this is creating certainty and regulations around quite a perceived risky kind of casino-like gambling that the markets pick up on. And so if you're providing certainty and regulatory frameworks around leverage spot trading, that's incredibly powerfully bullish.
That's it.
Yeah.
I mean, and the thing to watch, the thing that I'll be watching with this one is until the market structure bill comes in and is passed with bipartisan support, hopefully. I mean, I'll be looking out for whether the SEC disputes it. Are we going to see a turf war between the two? It's scored highly because obviously it's real, it's live, it's enacted, it's in place. Obviously, other stories we've looked at over recent days and weeks, they've been scored down because they're either not implemented yet or they're not finalized. This was pretty much only scored down for 2 reasons. Number one, obviously there may be disputes by the SEC, which can't be ruled out. And number 2, obviously we don't know that the other big players are definitely, like the CBOE, are gonna follow in their footsteps. That can't be confirmed, but the likelihood is pretty high that they will. So that's why the upside is actually a 7.2, which brings it very close. If this does happen, there's no disputes, and others follow, that this pushes to a 7.2, which is almost as high as the BlackRock story. It's a really incredible piece of news we should watch.
I think also the reason why the tool has picked up, moved it from a 7.8 to a 5.3, is the success of this depends on liquidity, right? Just because you built this, the stadium doesn't mean that the players will come, right? Right.
Well, it's proven. It reminds me of that. You've just reminded me of, obviously, post 2008 when China had its economic boom, and they were trying to really encourage infrastructure spending. Obviously, they lent out to local governments. That led to, there's a town, and if you know what it's called in the comments, please let me know. But there's a town/city which built a stadium which can hold 50,000 fans, and the population of the city is less than 10,000. So it's like you've heard build it and they will come. Well, it's not always true.
That's a great example. Really, in essence, if they cannot attract deep liquidity quickly, the spreads will be high, right? And the traders will stay away. They need to steal market share from the incumbents rapidly in order to make this survive. So it's kind of wait and see. I agree that it doesn't deserve a 7.8, but 5.3, that brings it down. It's still incredibly bullish, but that's why it's not a 7.8.
Yeah. And as I said, legal rule is already in effect. It's given the probability, for those of you that are interested and you'd like to think in terms of percentages, it's given it a 75% probability that actually the permissions will expand to other organizations. So it's not predicting in that the SEC/CFTC will have a turf war, but it just can't rule it out. So yeah, I'm going to just quickly jump onto the next story. Now, as I said, when I was asking it to search and obviously looking through, I completely overlooked this story. I thought it was part of the same story. So obviously the CFTC has launched a supervised pilot allowing Bitcoin, Ethereum, and USDC to be used as collateral in US derivatives markets for the first time. So the program obviously includes new safeguards, weekly reporting, custody rules, and updated guidance, replacing old restrictions. So this marks a major step toward integrating digital assets into regulated financial market infrastructure. And Bitcoin is therefore treated like real financial collateral. So it's used inside regulated US markets. Now, obviously, you can read from the headline, I thought the pilot was contributing in some way towards the regulation that we just saw in the previous story. It's not. It's completely different. It's a completely separate pilot that the CFTC is championing. So basically, anyway, the narrative would have you believe, if you're clever enough to understand it, that Bitcoin is becoming a fully recognized institutional grade financial asset. From a manipulation level, it's medium to low, because the framing is that the CFTC integrates Bitcoin into US collateral markets. In terms of emotions, you're going to have relief because regulators aren't blocking the adoption. Confidence, Bitcoin is acceptable as institutional collateral. You're going to see cryptos enter, or believe that crypto is entering mainstream financial plumbing, and the US is catching up globally. So in terms of the facts, so the CFTC pilot does indeed allow Bitcoin, Ethereum, and USD as collateral. The pilot provides weekly reporting of collateral usage. The CFTC issues no action relief, and guidance defines custody, aggregation, and valuation haircuts. The program aims at safer domestic venues after offshore failures, and only those three assets will be allowed during the first 3 months of the pilot. So the claim is that, obviously, it's a few of the claims that are misunderstood that the tool has picked out, is that obviously this makes Bitcoin a fully regulated commodity everywhere. The reality is it's limited to supervised derivatives. The claim is that collateral approval equals ETF approval. It doesn't. The reality is they're unrelated regulatory tracks. And the claim is that obviously all crypto assets can now have back trades. The reality is, no, it's only going to be those three with strict controls, and it's a pilot. So the distinction is that obviously this one is specifically focusing in on collateral. It's testing whether Bitcoin, Ethereum, etc. can be used as collateral for obviously loans, etc., specifically derivatives, but the wider expansion being loans. So in terms of, I'm going to keep it simple because I'll be honest, this is one that I completely misunderstood. Yeah, it's complex stuff. I assumed it was the same story. It is not. It's actually a completely different story that has a different impact. So I scored this completely wrong. I completely misunderstood it. So I scored it. In fact, maybe I scored it lower. I won't tell you whether that was right or wrong.
Okay.
And the reason was I just felt that the other story had more long-lasting impact. I thought this is a pilot, so it would score lower.
I'm with you, Dom. When I first read this, I didn't really understand how kind of collateral is used in this context. But what I picked up on is the CFTC, and then the pilot, as you indicated, that it's not implemented as policy, but they're just testing out. But
that's it.
I then further kind of understood that it's about collateral, and it's about backing up what traditionally has been only the US dollar and treasuries, right? That's the only form of collateral. Now they recognize that a potential is crypto, which is huge. That kind of flips it for me. That like makes it, well, okay, collateral. It basically increases the grade of how they classify crypto formally, as it's on the same level as cash or US dollars and treasuries. So
that's it.
I would rate it as like a 3 or a 4.
So you're going lower than the previous story?
Oh, I actually yeah, it's good to see what you're doing, Dom. You're giving me a chance.
I went lower.
Okay. I'm gonna say actually this is huge. I think this is really, really big. Well, I'm gonna stick with a 4. Let's go for the 4.
Oh, David, I thought you should have stuck to your guns. You hit the nail on the head. Yeah, it is a top tier structural advancement, even though it is a pilot. Yeah, but the fact is the pilot is being conducted directly by the entity themselves. Yeah,
Yes.
They're not outsourcing it.
Okay.
They've got a firm timeline. They've made it clear that it's fully documented. They've got all the specific assets, and you were completely right. The topic of collateral, meaning it's that asset has to be let's use a house, for example. The reason you can take such an extensive mortgage against your house, as David well knows, because you understand this better than I do, is because the bank knows that the likelihood of that property decreasing in value by a significant amount is lowered, because obviously there is value in real estate in certain places. If that real estate has anything wrong with it, you're going to be able to get less of a loan against it, because the collateral that you're offering against that loan isn't as good. The bank is counting on, if you're unable to repay your mortgage and your debts, that therefore they can just reclaim the house. So the better the collateral, the better interest rates that you will get when you take on these loans. In this case, for derivatives. So the collateral is actually a huge story. So it's one of the clearest signals that Bitcoin has ever had that it's being treated as a serious financial asset rather than a speculative instrument. The collateral status is what historically upgraded commodities like gold into core market infrastructure. Now, the pilot doesn't create the retail flows that obviously you've seen with the big major banking adoption stories that we've covered, but it does something equally, if not arguably more important, embeds Bitcoin inside the financial plumbing system in much the same way that the previous story did. But collateralization is such an underpinning to financial markets that it heightens the impact, and immediately, because the pilot is already in session. So Clearinghouses, FCMs, institutional trading desks will now see Bitcoin as usable financial collateral and not an exotic asset. That's a different level of legitimacy, one that we haven't actually seen for quite a while. And that's because this is a supervised program with reporting, custody rules, haircut methodology, and early visibility. It signals that US regulators aren't just tolerating it, and it signals that they're not just doing it as a pilot to test the waters. They're piloting it to sort of almost ensure that they can roll it out. Yeah, to almost iron out any kinks is what it signals. So this would, if passed, but already at this stage, the fact that they're even doing this, because how frequently did they ever do this? Never. With any other type of asset. As I said, the last time it was with gold. So this is Bitcoin alongside. Sorry, go on, David.
So just to comment on that, you're exactly right, Dom. We're dealing with Bitcoin potentially, right? And the volatility within Bitcoin, it could crash 20% in an hour, right? So the clearinghouse has to liquidate that collateral instantly to stay solvent, right? So it's amazing that the CFTC has allowed this pilot, because it's paving the way to them actually implementing this as policy, right? They wouldn't do it, and then they wouldn't make it public if they weren't serious about it. But this is a huge, huge move. That's why the tool has picked it up as quite bullish.
Well, the historically, the modern portfolio theory has said 60-40 portfolio, 60% stocks, 40% bonds. And it would have you believe that there's no safer bond you could buy than a US Treasury.
Yes.
Now, this puts Bitcoin, at least in framing, alongside US Treasuries.
Yeah.
High quality liquid assets in function, if not yet in classification. So in simple terms, think of it like this. Bitcoin just earned a seat at the derivatives table, the financial machinery that runs trillions of dollars of economic activity. So it's a deep structural integration. It's not hype. This makes this event materially significant. Yeah, it's an upgrade that strengthens Bitcoin institutionally, and it will matter. And this is the first time the tool has actually said this. It is sure that it will matter. This will matter in over 5 years. Yeah, wow. It is a really big thing. The only downsides that you can really see is obviously if the pilot doesn't go ahead, but there's nothing that indicates the CFTC doesn't operate pilots like this, especially with collateral. And so the likelihood that they would be operating these things without a drive to at some point implement, and without the likelihood of ironing out the kinks, is actually pretty low. So the pilot execution, the most we can say right now, the likelihood they will finish the pilot is very high. They're going to do it.
Yeah,
it's already real. It's an implemented pilot. They've got the reporting. It's highly structured. The only real risk is that obviously it may tighten surveillance and reporting burdens, and that obviously it could reinforce Bitcoin as collateral only. Now, there are many people out there that David and I follow, and David, we should have a talk about this, but many that say that in order for Bitcoin to succeed, it can't just be a store of value. It's got to move into, it can't just be sort of like a house. It's got to move into that medium of exchange. We've got to use it as currency to buy and sell things. So although this is really structurally good, there is a risk that it could do that. That's one of the few reasons why it hasn't scored high.
But another element that I think the tool picked up is what collateral does is, well, putting Bitcoin as collateral is it removes the selling pressure from the market, right? It allows the large players to leverage their stack of Bitcoin without ever selling any, right? It creates a lockup effect similar to staking.
Good point. I mean, it really does. It really does. And think about that. If you're anyone who says at the moment, like what this headline really struck out to me as being is, and it's so confusing when you read these headlines because you don't know what they mean. I confused it with the previous story, but what the tool has pulled out is that obviously these institutions, these retail investors, basically anyone that has sat on the side and said Bitcoin, as you called out, is too risky. Well, this is saying the exact opposite. You've got the CFTC, one of the leading organizations in the world, one of the most risk-averse organizations in the world, basically saying, for the first time in a long time, we're at least going to assess whether Bitcoin, Ethereum, and USDC are actually can be used as collateral for derivatives. And I think that obviously, personally, I think that regardless of the outcome, that alone solidifies Bitcoin and to some extent Ethereum in a different asset class. I'd be interested to know why they put Ethereum in there, to be honest.
Yeah,
But
good
we'll have to wait
point.
and see.
Good question. It's something to watch.
It is something to watch. Because don't forget, guys, as David and I nearly did with this story, most will miss it, most will mock it, and most will wait until it's too late. But the 1%, they're with conviction.
Be a 1%er. Thanks, folks.
Thanks, guys.